Truth is not what you want it to be. It is what it is, and you must bend to its power or live a lie. Miyamoto Musashi, one of my favorite Japanese warriors. If you've not read his book of 5 Rings, don't know about him, amazing, undefeated in single combat with, I can't even remember the number of bouts to the death that he fought, but phenomenal. We're going to be quoting him a lot lately. Let's talk about what that actually means. Truth is not what you want it to be. It is not. Truth in our world is price movement. It is what it is. It's price movement. You must bend to its power or live a lie. You can sit there and say, I don't believe what the charts is doing. I'm going to do what I think I should do versus what the charts are telling you to do. Oh, the market's too high. Oh, the market's not going to keep going down. Oh, the market's going to keep going sideways. What the charts are telling you to do is what you do. It is so important. And how do you know what the charts are actually telling you to do? When I get to gold, I'm going to try to remember to tell you what the charts were showing us with that sideways slide over time and sort of what was getting ready. I warned you about it, and it happened today. I hope you were standing by and are ready to jump in on that potential move if it continues. We'll talk about that in just a minute. Let's jump into the S&P 500 and then the NASDAQ 100, then TLT, 20-year bonds, then gold. What do we see going on? Going into the third week of up movement, prices moving higher on the weekly candle plus the wick. However, the price percent oscillator's gone about flat, down for the day 0.64%. Derivative oscillator still oscillating upwards. We go to the 2-day chart. What do we see there? Well, remember the prior 2-day candle, the full one ended on Tuesday. So the one that we have today is just Wednesday, first day of a 2-day candle. So you're only seeing half of it. We'll see how it ends up over the course of Thursday. But it is a red spinning top, means indecision tending down. It's a solid spinning top. It's got a wick on the top and a wick on the bottom. When I say top, I mean like a spinning top. And the reason we call it that is because it looks like that, and it means indecision, a little wobbly. And we'll continue to watch it, pay attention to it. Price has, of course, moved through. And in fact, let's redraw that and do a little bit better job. It has nonetheless moved through the 2-day trend. So that has been violated. I don't like that. Yeah. Okay. Well, we want to connect 3 candles if we possibly can, and we just can't. So it's not the best of trend lines, but again, price is right there at the trend line. Price percent oscillator's going down. Now we saw that the weekly's weakening. The 2-day price percent oscillator's going down. Derivative oscillator's almost dead. Well, it's got, as we roll back a little bit, still got some room to move. But pay attention to what's going on. Are stocks pulling back? Have they topped? May have. That's why we want to be liquid, to take advantage of things if they occur. Don't think we'll have a weekly vertical crossover at the end of the week. It's got a long way to go, but we'll watch. What do we see on the 4-hour chart? Again, things peaked back on Monday the 15th in the morning, and then in the afternoon started sliding over and heading down. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Now remember, it's Wednesday. What do you do on Wednesdays? You back away from the market, take a look at what's going on. Look at the weekly charts on all 4 of our indexes. Put everything outside of your mind and just say, what is the weekly chart? The biggest trend we watch. What's that telling me? What's really going on? Write that down. Pay attention to that. Chew on that. See where that leads you. So what do we see happening? Again, price percent oscillator is flat. Price is still trying to move up, so we'll keep an eye on where things are. So we go from the Qs, to the Qs from the S&P 500. The Qs, of course, crossed over going up back on the 5th. So we're going into our second week of up movement. And of course, we see that price movement is higher than it was the prior week. Got a bigger box and a bigger wick on top. The price percent oscillator's lost a little bit of its upward momentum. Derivative oscillator still heading up. That's on the weekly chart. And then we go from the weekly to the 2-day. Now again, QQQ was down 0.49%, and we see that so far we have, again, a bit of a pullback, a red open body that's weaker than a solid body, but again, a bit of a pullback, a wick on the top and the bottom, just the first day of the latest 2-day candle. Price percent oscillators heading down, derivative oscillators getting very short as opposed to long in the tooth. And we go to the 4-hour chart, and of course we have 3 4-hour candles, so a day and a half of decent down movement. Now again, remember, 2-day is in a confirmed up move. The weekly chart's in a confirmed up move. We have a pullback now on the 4-hour. Doesn't mean you have to be getting out of any trade that you had jumped into after you had that crossover going up. It just means you need to pay attention to what's going on. And again, you can always pull your profits. Real thing you want to concentrate on and pay attention to, of course, is we see definite weakening in that 2-day price percent oscillator. That's not good. And of course, we see that weekly chart weakening some, but still fairly strong. So make those calls yourself. Pay attention to what's going on. Remember, you can always jump back in when that 4-hour chart moves back over. But after you jump in, somebody asked me, they said, what do you use to make your jumping in decision? Well, the 2-day and the weekly have to be moving in the same direction. And if they are, then you're looking to use your 4-hour chart as your decision chart, your trigger pull chart. If it's pulled back and going in the opposite direction when it rotates back over in the same direction as the 2-day and the weekly, that's when you pull the trigger. Then you step back and monitor the 2-day and the 2-day and the weekly to determine how long to stay into that trade and how much profits to take. That is, of course, one method of doing it. We have one other method, and that is when we have a weekly vertical crossover. We check the charts, and that always happens on a Friday, and we check the charts that Monday morning and see if we have a jumping in point. If price is still moving in that same direction, we jump in and ride that almost always to beautiful victory and profits. Virtual profits, of course, because we're not a stock calling service. We're an education firm. What do we see going on bonds? Bonds up for the day 1.08%. However, we see that we have a red down candle forming. Last week was a red spinning top. This week's a hammer heading down. Haven't crossed over going down yet, but again, do have down pressure on that weekly chart. Price percent oscillator still positive, as is the derivative oscillator, but going into the second week of down movement. What do we see on the 2-day chart? First day of the latest 2-day candle, green up candle forming after 4 or 8 days worth of down movement. So again, pay attention to what's going on. It was a nice bump up for the day, but that doesn't put us in any position to jump into a trade when the 2-day is still in a confirmed down move. What's the 4-hour chart doing? Crossed over at the end of the day, going up after an up morning and an up afternoon, pushing through the 2-day down trend line. So we'll watch, see what there is. We got to have 20-year bonds sort out and the weekly and the 2-day first moving in the same direction before we can hope to find a trade. Now to gold as promised. Can you believe gold up 1.65% for the day? And of course, what do we see going on? Remember, gold peaked back on the week ending June the 28th, the last week in June. Then we had a down week, that shortened trading week with the 4th of July here in the States. It was a red open box. Again, not a red down candle, not one of these strong down candles like we saw back on the week of ending March the 8th of this year, but a pullback. And then the following week, that was the week ending the 12th of July, we saw things try to move up. And then this week we see things moving up actually higher than the down week where it started and where it peaked. Now, we're not anywhere near where things peaked during the super big up week. That was at 135.55, closed the day at 134.58. So again, not too far away, about $1, but that's nice to see. And again, we see that the price percent oscillator is heading up quite nicely. Derivative oscillator still losing some momentum. We go to the 2-day chart. What do we see there? First day of this latest 2-day candle after a red doji means a lot of indecision, tending down. Didn't push through, however, the 2-day trend line or the weekly trend line. What do we see happening on the 2-day chart? First day of it, we have a green up candle, and it looked like we were going to have a crossover going down. Did not happen. Gold managed to pop up, and that's quite nice. It's laminated almost on the red signal line. Derivative oscillator still negative, but price percent oscillator is positive, however slight that might be. But with that surge of 1.65%, that's pretty beautiful to see. So we've had at points laminated over the last many days. We have seen gold really sliding sideways, down for a day or so, up some, down for another day or so, but bounded up in the morning and then ended the day with a crossover on the 4-hour chart going up. What does that mean for us? Well, if you tried to find some jumping in point in the afternoon, which again is, I don't know how you did that, not that I would recommend it. What we need to look for is a jumping in point in the morning. Let's see how gold continues to do. You can check it out after 10:30, after idiot hour. Of course, you can go by what your 4-hour candle looks like in the afternoon. I am just praying that gold is going to push up and through the prior high that it hit around the 135.55 mark, and will push up through that and keep going. It may not. It may just push up to there and then move back over. Again, just sort of sorting what it's going to do, laying a good base for further up movement. This might be the up movement. So pay attention, practice. What you're going to learn from practice trading this is you're going to start learning how gold works in the summertime environment. If you're not practice trading and following these things, if you're not following these things on a daily basis and practice trading when you can, you'll never learn the critical lessons that you need to learn. That's why we say 10 to 15 minutes a day, 5 days a week, every day the market is open. That's all you need to do. You don't have to devote 3 or 4 hours, because you'll do that for a while, those of you who are motivated, but then life will take up the rest of your time. I ask you to do what you can do and what smart people will do. I say over and over again, this is not a get-rich-quick program. This is a get-rich program. We would love to see you figure out how to read these charts, use all the information we use, buy our book, read it, inculcate all these lessons, everything else you learn out there in the market, practice trade until you get good, and then make yourself fabulously wealthy. But that's going to take time and energy. And those of you who think this is something you can do overnight, you will find graveyards of tens of thousands littered along the way, hoping to be stock market mavens who never make it. I can name hundreds, 100 probably, people I know if I sat down, who started in all this, who I've seen over the years, who've talked big, but didn't have the staying power. And again, you walk softly and you carry a big stick. That big stick is knowledge and control of emotions. If you haven't purchased our book, please do so. I'm fulfilling orders this afternoon. If you've ordered one lately, I'm back in town. Those are all going out. If you live overseas, and again, you can find links to in the show notes to purchase the book. If you live overseas and would like to buy the book, email us, cw@chartingwealth.com. I will send you a PayPal invoice. Pay that. We'll send your book wherever you are in the world. If you're not a Patreon supporter and want to be, we got a lot of great bonuses for Patreon supporters, including our short chart training, quarterly chart training, Bitcoin training. We got all sorts of great training for our Patreons. Plus, you get your monthly call-in question and answer session, and we review the stocks and ETFs that you are interested in. And again, our Patreon folks, I'm going to get that one for July done soon. Go ahead and email me if you haven't already, the stocks and ETFs you want me to review for you. Going to be doing another training video here soon on liquidity and how important liquidity is for your success in what we do. For those who are free subscribers to chartingwealth.com, to our daily review, we do have a special training for you. It is it's entitled "If You Lose, Lose. If You Win, learn. Oh, I'm sorry. If you win, if you lose, learn. And I take some lessons from Jocko Willink and others, and I think you'll get a great deal out of that lesson. That's special for our subscribers. Again, subscribing's through it free. Go to chartingwealth.com, sign up. You'll get our daily market review and our once a week weekly review and forecast, plus all these special trainings will be sent out to you on a daily basis. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.